Welcome to Suthichai Live English Podcast. A recent report by the NESDB, National Economic and Social Development Board, which is Thailand's major economic planning agency. The warning discusses the debt servicing cost of the Thai government could exceed 12% of revenue by 2027, potentially triggering a credit rating downgrade to non-government grade. If that happens, it would be quite serious, a very bad setback for Thailand's economic future. This precarious situation is attributed to sluggish economic growth, persistent budget deficits, and low government revenue collection due to a consumption-reliant tax structure. The Finance Ministry projects continued deficits and rising debt levels through 2029. That means up to 3 years from now, necessitating urgent reforms to increase revenue efficiency and restructure the tax system to maintain fiscal stability and avoid severe economic repercussions. So the red flag is Thailand's mounting debts could lead to a fiscal crisis in the very near future. How should Thailand prevent that from happening? How can Thailand maintain its financial health at the same time to manage the mounting debts in a more effective and more transparent way? Let's get Ping and Pong to dive into this very big issue in Thailand's economic landscape at the moment. Hi, Ping and Pong.
Welcome to Suthichai Live English Podcast. I am Ping.
And I am Pong. We are Suthichai's AI team of commentators.
Today, we're embarking on quite a crucial deep dive.
Yeah.
We're looking into Thailand's escalating government debt.
Yes, it's a topic that's really becoming central to its economic future, isn't it?
Absolutely. We've sifted through comprehensive reports, sources like the Bangkok Post, Nation Thailand, and Dalek Ho.
Oh, yeah, good sources.
Trying to bring you a clear, concise picture of what's happening, behind the headlines.
And our mission today for you is really to dissect the key figures.
The numbers, yeah.
Understand the underlying structural issues and explore the potential ripple effect
Effects on what exactly?
on Thailand's fiscal stability and, importantly, its international credit standing. We want to make sure you walk away with a solid grasp of this complex situation.
Without getting lost in all the economic jargon.
Exactly.
Okay, so let's get right into it then. The core concern highlighted by the Finance Ministry, it really revolves around public debt. Can you give us the current snapshot? Where do things stand right now? And maybe more importantly, what does the immediate future look like?
Okay, absolutely. So as of August 25th, Thailand's public debt hit 12 trillion baht.
12 trillion.
That's the local currency, yeah, which already puts it at 64.2% of GDP.
Okay, what's GDP again for everyone?
Right. Gross domestic product, basically the total value of goods and services produced in the country in a year.
Got it. So 64.2% already.
Yes.
Yeah.
Now, what's truly ringing the alarm bells is the projection for fiscal year 2026.
What are they saying?
Well, the Finance Ministry forecasts significant new borrowing. We're talking roughly 1.2 trillion baht.
Wow.
And alongside that, a budget deficit of about 860 billion baht.
So spending more than they're taking in.
Precisely. And this isn't just about, racking up more debt in absolute terms. It means the public debt level is expected to reach 67.3% of GDP by the end of FY 2026.
Fiscal year 2026, right?
Right, the country's financial year. And that's 67.3%. Well, it's pushing it uncomfortable close to the legal ceiling,
Which is
70%.
okay. That seems like a pretty dramatic increase in a relatively short time. What's driving this? Is it just more spending, or is there something deeper going on with the economy?
It's a combination, definitely, but sluggish economic growth is a major contributing factor.
How sluggish are we talking?
Well, Thailand's GDP growth for 2025, it's now expected to hit just 2%. That's a noticeable downgrade from an earlier forecast, which was 3%.
So lower growth than hoped.
Yes. And unfortunately, low growth is also projected for 2026. Think about it like trying to pay off a big mortgage when your income isn't really growing much.
Gets harder and harder.
Exactly. It becomes significantly harder to manage that debt relative to the size of your economy or your paycheck in that analogy. This slower growth means the denominator, the GDP part of that debt to GDP ratio, isn't expanding quickly enough to sort of absorb the new borrowing.
Right, and this isn't just a headache for next year, is it? Does the medium-term outlook offer any relief?
You're right to look further out. And, well, if we connect this to the bigger picture, the medium-term fiscal framework that covers fiscal years 2026 right through to 2029, it paints a pretty challenging picture.
Oh.
Yeah. While the government says it aims to gradually reduce the budget deficit, the framework itself remains firmly in a deficit position for that whole period.
So still spending more than earning.
Correct. And public debt is projected to just keep climbing. We're looking at 68.5% of GDP by FY 2027,
I think we're close.
then 69.2% by FY 2028, and inching up again to 69.3% by FY 2029.
That is really creeping up to that 70% ceiling.
It is. This consistent trend shows the country hitting or getting very near that critical 70% mark sooner than they initially thought.
And what does that mean, practically speaking, for you, the listener?
Well, for you, it means the government's room to maneuver, its ability to maybe implement new economic stimulus packages or respond effectively to unforeseen crises like another pandemic or a natural disaster.
That room gets smaller and smaller.
It could become severely limited. We're talking just a few years down the line.
Okay, it's clear these debt levels aren't just abstract numbers on a page. They have very real-world consequences. And this is where it gets particularly interesting, I think, for the country's international standing. The implications for Thailand's credit rating. What's the big warning sign we need to watch here?
Right. And this raises a really important question for you listening, because a country's credit rating affects, well, almost everything, from borrowing costs to foreign investment confidence.
So what's the specific warning?
There's a report from the National Economic and Social Development Council, the NESDC. They're a key government think tank, and they've issued a pretty stark warning.
Okay.
They highlight that the ratio of interest payments, just the interest on the government debt, compared to total government revenue, that ratio is on track to go above 12% by 2027.
12%. Why is that number significant?
That 12% threshold is absolutely crucial. It's a key metric that the big international credit rating agencies, Moody's, S&P, Fitch, they use it to assess a country's financial health.
And if Thailand crosses that line...
If Thailand breaches that 12% threshold, it could very well trigger a downgrade to its sovereign credit rating.
A downgrade? That sounds serious. For our listeners, maybe break that down. What would a downgrade, especially if it went to non-investment grade, actually mean for Thailand?
Okay, think of it like your personal credit score, but, for the whole country. If your score drops significantly, your bank suddenly sees you as a higher risk.
And your mortgage or loans get more expensive.
Exactly. For Thailand, a downgrade, particularly if it fell into non-investment grade status, sometimes called a junk bond rating, would make borrowing significantly more expensive for the government itself.
Higher interest payments.
Much higher. It would basically signal to international investors that lending money to Thailand or even investing in Thai businesses is a riskier bet than before.
What could that lead to?
Well, it could deter foreign direct investment, which is vital for growth. It could potentially even cause capital flight money leaving the country. And it would impact the country's access to global capital markets, making it harder and definitely more costly to fund, critical infrastructure projects or even just basic government operations.
Okay, that paints a pretty grim potential picture. But I feel like I've seen some mixed signals recently, different takes on Thailand's credit ratings. Can you maybe clarify where things truly stand? Why might there be conflicting views?
Yeah, indeed, it's not entirely black and white. It's important to see the nuances. Currently, Thailand holds a BA1 rating with Moody's.
What does BA1 mean in simple terms?
Okay, so BA1 is still considered investment grade. Think of it like a reasonably healthy credit score for a country.
Yeah.
But it's on the lower end of that investment grade spectrum, signaling, let's say, moderate credit risk.
Okay, so not terrible, but not top tier either.
Right. And what's causing some concern is that Moody's recently assigned a negative outlook to this rating.
Negative outlook?
Yeah.
Meaning they might downgrade it soon.
It means there's a higher chance of a downgrade in the medium term, yes. Moody's cited things like lingering economic uncertainty, the impact of reciprocal tariffs on trade, a dip in tourist numbers around the time they did their assessment, and a general perception of weakening economic potential and fiscal status.
But you said there were other views.
Exactly. It's worth noting that the other major agencies, S&P Global Ratings and Fitch Ratings, have actually maintained their ratings for Thailand. That's BBB plus for both, and importantly, with a stable outlook.
Stable outlook means they don't expect changes soon.
Correct. They're basically saying they see things holding steady for now, and they emphasize different strengths.
Like what?
Well, they point to Thailand's pretty robust tourism recovery after the pandemic, its healthy levels of foreign exchange reserves, a consistent current account surplus.
Which means exporting more than importing, essentially.
Right. And they also highlight a well-developed domestic capital market, meaning the country can raise funds internally pretty effectively. Plus, they note that most of Thailand's government debt is actually held domestically by Thai institutions and individuals, and it has a relatively long average maturity.
So less immediate pressure from foreign lenders, maybe.
That helps manage the immediate burden of repayment, yes. So you have the situation where, Moody's sees these accumulating risks and flags them with a negative outlook, while S&P and Fitch emphasize the country's resilience and underlying strengths. It's quite a nuanced landscape. Different agencies weigh different factors.
Okay, so the immediate numbers, these medium-term projections, and the varied takes from credit agencies, it all paints a clear picture of urgency, doesn't it?
It certainly does.
But to really understand this challenge, we need to look beyond just the symptoms, the debt figures themselves. What are the deeper, maybe structural issues contributing to these fiscal risks?
That's a crucial point. We need to look at the foundations. A key fiscal weakness, identified again by the NESDC, is Thailand's consistently low government revenue collection.
Low revenue? How low are we talking?
It currently stands at less than 16% of GDP.
Okay, is that low compared to other countries?
Yes, significantly.
Yeah.
To put that in perspective for you, the average for OECD countries, that's the Organization for Economic Cooperation and Development, mostly high-income countries, their average is 24.8%.
Wow, quite a gap.
Huge gap. And even the average for the Asia-Pacific region is higher, at 18.6%. So Thailand's collecting considerably less as a share of its economy than its peers.
It's like having an income that's consistently lower than your neighbors, even if maybe your spending is also a bit lower. Eventually, that creates a structural squeeze, right?
That's a good analogy. It absolutely does.
So why? Why is government revenue collection so low in Thailand? Is it about the tax system itself, or maybe issues with, actually collecting the taxes owed?
It seems to be largely about the structure of the tax system. The NESDC report directly attributes this low collection rate to how Thailand's system is set up.
How so?
It relies much more heavily on consumption taxes than on taxes on income or assets.
Okay, so things like VAT.
Exactly. Indirect taxes like VAT, the value-added tax on goods and services you buy, they make up a substantial 51.4%, more than half, of government revenue.
Yeah.
Meanwhile, direct taxes, like personal income tax or corporate income tax, account for only about 36.2%.
And why is that structure a problem for revenue growth?
Well, this heavy reliance on consumption means that government revenue tends to grow more slowly than the overall economy grows. Over the past decade, there's a measure called revenue buoyancy.
Okay, what's that?
Think of it as how effectively tax revenue sort of bounces back or grows in line with the overall economy.
Yeah.
In Thailand, this measure has been consistently below 1. Meaning that for every 1% the economy expands, tax collection grows by less than 1%. It's a clear sign of an inefficient system that isn't fully capturing the economic activity that's happening.
So the tax system isn't keeping pace with economic growth.
That seems to be the core issue. And adding another layer of complexity to this whole situation is Thailand's very high level of household debt.
Household debt, how high is that?
Currently around 87.4% of GDP. That's a lot of debt owed by individuals and families.
And how does that connect to the government's fiscal problems?
Well, it limits the effectiveness of any potential economic stimulus measures. If the government tries to boost the economy, say by giving out cash, people burdened with high debt might just use that extra money to pay down their loans rather than spending it and stimulating demand.
Right. So the stimulus doesn't quite stimulate as intended.
Exactly. It dampens the impact.
Okay, these are clearly complex, deeply rooted challenges. So for our listener, what's the path forward? What can actually be done? What are the NESDC's urgent recommendations to try and tackle these concerns and get Thailand onto more stable fiscal ground?
Right. It's not just about identifying problems, but finding solutions. The NESDC urges the government to take a multi-pronged approach. Several concrete steps are needed.
Okay, like what?
First and foremost, they strongly recommend dedicating a larger slice of the annual budget specifically to repaying the principal on its loans. Not just the interest, but the actual loan amount.
Especially that COVID-related debt, I imagine?
Yes, particularly the significant debt that was accumulated during the COVID-19 pandemic response. The idea is to actively reduce the overall debt pile.
And the benefit of that?
It would improve the country's debt servicing capacity, make future interest payments more manageable, and, crucially, create more fiscal space, more breathing room for future investments or, unexpected crises.
Makes sense. Pay down the principal. What else?
Second, and this is equally vital, there's a pressing need to increase the efficiency of revenue collection.
Collecting the taxes better.
Yes, but it goes beyond just better enforcement. It means fundamentally restructuring the tax system itself and expanding the tax base, finding ways to bring more economic activity into the tax net.
How could they do that? Restructure the system?
Well, one specific recommendation is to conduct a critical review of existing tax privileges and incentives. Tax breaks given to certain industries or activities, and potentially cancel those that are no longer proving cost-effective, or maybe are simply draining public funds without delivering sufficient economic benefit in return.
Okay, so it sounds like a dual strategy is needed then to aggressively manage the debt that's already there.
Pay it down faster.
While at the same time strengthening the government's ability to actually generate sustainable income for the long haul.
Precisely. That captures it perfectly. The overarching goal here is clear. Fortify Thailand's fiscal stability. Significantly reduce the risk of that damaging credit rating downgrade we talked about.
Which would hurt borrowing costs and investment.
Exactly. And perhaps most importantly, support sustainable economic growth in the medium to long term. These aren't just, minor tweaks. These comprehensive reforms are seen by the NESDC as critical steps.
Critical to avoid what?
Critical to preventing what could potentially become a full-blown fiscal crisis down the road and ensuring the country maintains the financial health needed to navigate future challenges and seize opportunities for growth.
As we've explored today, it's clear Thailand is navigating a really tricky economic landscape. It's balancing those immediate needs, like supporting growth, with the absolute imperative of long-term fiscal stability.
It really is. And the choices being made right now, the policy decisions, will undoubtedly shape the nation's economic resilience for, decades to come.
It makes you think, doesn't it?
It does. And perhaps this raises a broader question for you, our listener, to consider. How do governments everywhere really manage this constant tension?
The tension between what?
Between stimulating the economy in the short term, which, let's face it, often involves increased borrowing and spending, and ensuring fiscal prudence, fiscal responsibility for future generations.
It's a very delicate dance, isn't it?
It really is. How do you keep the economy moving today without accumulating unsustainable debt that ends up restricting growth and opportunity tomorrow? That's the fundamental challenge.
A challenging balance indeed. Well, that's all the time we have for this deep dive. Thanks for following Suthichai Live English Podcast. I am Ping.
And I'm Pong. We are Suthichai's team of commentators. Stay tuned for the next episode.
Thank you, Ping and Pong. Stay tuned for the next episode. And today's warning about Thailand's mounting debts and fiscal crisis is worth a lot of serious, urgent attention from the Thai government. Until the next episode, bye-bye. 1.5 ล้านแล้วครับ 1,500,000 คนผู้ที่ติดตาม Subscribe สุทธิชัย Live ใน YouTube ขอบคุณทุกท่านนะครับที่กดแชร์กดไลค์และขอบคุณเป็นพิเศษสำหรับผู้ติดตามสุทธิชัย Live ใน YouTube ที่กด Super Chat Super Sticker เป็นกำลังใจให้กับทีมงานของผมครับ 1.5 ล้านวันนี้ตั้งเป้า 2 ล้านก่อนสิ้นปีขอบคุณทุกท่านที่ช่วยกันครับ